Assalamualaikum and hello everyone. My name is Siti Aisyah binti Masaid. So today I will present to you my research thesis about the profitability performance of consumer products and services sector. So these are the 5 major content that I will present. Firstly, I start with the introduction. Today, business environment has undertaken several changes, complexity and uncertainty. Thus, the firms are facing several competitive pressure to do things very well. So, it is important for firms to continue maintain their performance. Most of the companies are finding their ways to improve their performance. Firm performance is important because it will show the first impression to the investors or individual who are interested in the company. Moreover, the measurement of performance is important for the effective management of any firm. The performance measurement for the firm is important to make a comparison between different periods of the performance. To measure firm performance, company profitability also should be considered. If the firm can generate high profits, then we can conclude that the firm performance is good as well. This is because if the company generate more profit, then the company can provide more return to their shareholders. For the problem statement, there are several outputs analyzed of the company which are influenced by all possible variables. However, the main objective of this analysis is to identify the determinants of the firm's performance of the public company in Malaysia. Therefore, this paper is aimed to review the growing determinants that have an effect on the performance of public listed companies in Bursa Malaysia in the consumer and services sector of the company. Although the study focused only on Malaysia, it is believed that this research study could benefit many countries as well as academic scholars. The research question is what are the determinants of firm performance, and the research objective is to examine the determinants of firm performance. Next is scope of the study. The issues of the study are firm performance, which involve public listed companies in Bursa Malaysia. There are 49 securities that we choose. The method used is multiple regression analysis. Regression analysis is a form of quantitative testing that is used where the study involves measuring and evaluating multiple variables where a dependent variable and one or two independent variables are used in the relationship. Next is the limitation of the study. The limitation of this study are the analysis did not touch all performance science, but only accounting performance will be covered. Secondly is this research only focused on the public listed company at Bursa Malaysia for only a year period of study, which is in 2019. For the significance of study, this study contributes to the body of knowledge in several ways. Firstly, the value of this study is that it can enhance the managerial of companies. Next, this study may generally be of interest to other researchers who are researching potential determinants that influence firm output in the financial sector. Last but not least, the result of the study will rebound to the benefit of publicly listed companies in the Bursa Malaysia. Next, I continue with the literature review. To analyze about firm performance and the determinants, the researcher should discover and figure about the relationship between firm-specific explanatory determinants and profitability. Consequently, the major theories covered in the studies on firm performance are the resource-based theory, RBT, for better clearer in terms of theoretical understanding. In this theory, the resources that are valued, infrequent, difficult to duplicate, and not identical obtained firm are the best for long-term growth. Next, I continue with review of literature and research hypothesis. First is liquidity. Liquidity is defined as the ability of a firm to convert an asset to cash quickly. It is also described as a firm's ability to pay off its short-term commitment. One part of a firm's capital structure is leverage. This is because a trade-off between company and financial risk is somehow implied in the option between debt and equity. Other factor is firm size. Firm performance can be related to the firm size due to suggestion by several authors. The next factor affecting asset return is the asset turnover ratio. Total asset turnover is a ratio used to calculate the turnover of all the assets. The fifth independent variable is firm growth. Firm growth is the extension over time of the growing of an organization or company. Lastly is EPS. Earnings per share are the income to tax magnitude relation to the number of stock listed. For the data collection, population units of study are public listed companies that registered at Bursa Malaysia with a period of study in 2019. The type of analysis that we use in this study is a cross-sectional analysis which involve 1 year period of study and a number of samples. The resource of data collection used are econ and data stream. For sample selection, the selected sample from population 49 unit of study that involve the consumer products and services sector that listed in public listed companies at Bursa Malaysia are 49 samples. So here is the table measurement of variables that shows the formula of the independent variables. The method used is multiple regression analysis. Regression analysis is a method to analyze the relationship between dependent variables and independent variables. This method has always been used to estimate the values of variables based on two or more other variables. P-values and coefficient are used in this analysis in order to identify which relationship is statistically insignificant or insignificant. Next is findings and analysis. Here is the findings table for the research framework. The return on the asset is the dependent variable, while the liquidity, leverage, asset turnover, firm growth, firm size, plus earning per share are the 6 independent variables for this study. Next, F statistic. The p-value of the F statistic is significant at significant level of p less than 0.1. It indicates that the research model is accepted. Next, adjusted R-square. It indicates that liquidity, leverage, asset turnover, firm growth, firm size, plus earning per share can explain by 32.9667% of the return on asset. The remaining 67.0333% can be explained by other independent variables. Next, I continue with regression analysis. P-value of liquidity, leverage, firm growth, and firm size is found to be insignificant. As such, HO is failed to be rejected. It indicates that this variable is not significantly related, while the p-value of the asset turnover ratio and earning per share is found to be significant at significant level p less than 0.05. As such, HO is to be rejected. It indicates that the two variables and the return on asset are positively significantly related. As the conclusion, this research finding aims to identify the various determinants which affect the output of the firm. There are 6 variables that were analyzed in the above-mentioned study, namely liquidity, leverage, firm size, firm growth, asset turnover, and earning per share. The approach used for evaluating the whole result of this determinant is by using the multi-regression procedure. The result of these findings showed that earning per share and asset turnover with return on asset are related in a positive way. The substantial and positive relationship is consistent with the relation between earning per share and asset turnover with firm performance. This means that the higher the return on the asset, the higher the earning per share of business, as well as asset turnover, and this suggests that the business is doing well. Lastly is recommendation. The recommendation for this study is the researcher should add a more dependent variable other than return on asset to improve the relation connecting other factors and firm performance. This study also helps the researcher identify how the firms manage their variable to achieve or maintain their performance. Based on the findings, firms can increase their number of total assets to increase their firm size. Other than that, the firm should improve more in sales by continually reinvent itself by adapting its product, sales strategies, and processes to meet a constantly changing paradigm. Also, the firm should improve in net profit or shift the firm's growth strategy, additional equity investment by offering more attractive dividend returns to investors. So that's all for my presentation today. Thank you.